The market is in a panic right now with everyone freaking out over these dips. But let me keep it real with you. These are little baby drops compared to what I've seen before. Minor dips happen on the way up. The days of 50% dips are long gone, thanks to big institutional players that are stabilizing the market with trillions of dollars of capital. The MACD on the weekly Bitcoin chart is still flashing bullish momentum, with that blue line holding strong above the orange, signaling the trend is still strong. This is the setup for the next leg up. But here's the brutal truth that I'll share with you. 90% of the narratives driving this run will crash and burn before the cycle ends, leaving retail investors wrecked while institutions rake in billions. If you're not mapping out these narratives right now, you're flying blind into the biggest wealth transfer in human history. In crypto, narratives drive capital. They determine where liquidity flows, when it rotates, and who gets left behind. Back in 2017, ICOs were everywhere until the SEC stepped in, and in 2021, NFTs exploded early on hype, and DeFi popped off later on in the summer. Now in 2025, we're seeing some stories already taking off with institutional money, while others are still waiting for retail mania to catch up. The key is tracking these narratives before they peak. Spot the early movers, ride the wave, and get out before you become exit liquidity. In this video, I'm ranking the biggest narratives of the year into a tier list. This one's gonna surprise you because it's very different from the top narratives you're thinking of. And we're not wasting time with every category. We're going deep on the ones that actually matter. These are the narratives pulling in billions, shaping the cycle, and giving you the best shot at building a portfolio that actually performs. Before we jump in, just a reminder that I am not a financial advisor, and this video is for educational purposes only. I'm sharing my experience with you. Crypto is very risky, so make sure you do your own research and never invest more than you're willing to lose. With that being said, on to narrative number 1. So I'm kicking things off with the real world asset tokenization. This is the monster of the cycle. BlackRock, Franklin Templeton, and other big institutions are all in deep. Over $25 billion in assets have been tokenized up until now, and this number keeps getting bigger. One of the biggest exchanges in Latin America, Mercado Bitcoin, moved $200 million onto the XRP ledger. Margex is tokenizing billions on Hedera, and the Genius Act gave the whole sector a compliance framework that banks are rushing into. This isn't vaporware. These are licensed, audited, yield-producing assets that are moving onto the blockchain. This is one of the most slept on sectors, but money talks, and it's pushed RWAs to grow 5-fold in the last few years. This feels like the DeFi yield farming boom of 2021, but with stronger foundations and actual institutional usage. We're also seeing expansion into ethical, environmental, and social markets like Vera's carbon credits on Hedera. And with an interest rate cut hopefully coming in September, this niche only gets hotter. There's regulatory risk, sure, but the inflows and infrastructure says it all. RWAs are S tier. I think they're going to define the cycle, and they're the anchor for real capital to flow in. And when institutional money moves like this, it doesn't wait around. Being positioned early and having the right setup can make all the difference. I've been using Margex for my trades lately. It's been reliable when things get volatile, and timing really matters. I've partnered with them to offer you a 20% deposit bonus using the code FireHustle, and it's only available for a limited time. The link is down below if you want to take advantage of it. Next up, Ethereum and stablecoin regulation. This is one you might not have thought of. Ethereum still dominates DeFi, but what sets this narrative apart is clarity. The Genius Act requires stablecoins to be fully backed with regular audits. The Clarity Act draws the line between securities and commodities, ending the confusion that crushed projects like XRP. And Ethereum's ETFs keep ripping with 19 days of straight inflows. Just look at the uptick on this chart of cumulative inflows. This is another narrative with something more than just hype. It's infrastructure dominance. Ethereum processes millions of transactions every day, holds almost 80 billion in total value locked, and supports thousands of dApps as the largest smart contract platform. Nasdaq wants to add staking to BlackRock's ETH ETF, and Trump's executive order allows crypto in 401ks. That's an entire wave of fresh demand. Could Solana chip away at that market share? Maybe. But Ethereum is still the king. It's battle tested, it's liquid, and it's regulated. And the fact that Trump's World Liberty Financial keeps accumulating should make this one obvious. This is S tier all day. It's the altcoin that everything else is riding on. Next is another one that's rarely talked about: modular layer 2s and restaking. There's been an infrastructure boom quietly happening thanks to all the scalability upgrades Ethereum has made. EigenLayer now has more than $16 billion locked from restaking alone, and just look at how much it jumped in the last month alone. Celestia acts as a data storage layer and cuts expenses by up to 95% for networks like Ethereum rollups. Base and Avail give developers simple tools to build custom blockchains faster and with more security security. Here on L2B, you can see that layer 2 activity keeps going up month over month. This feels exactly like the 2020 layer 2 buildup that came before the DeFi explosion. Guys, this isn't just my opinion. It's right in front of you. Look where the smart money is going. VanEck launched a $100 million fund focused on Avalanche-based L2s. The technology is complicated and most retail users won't understand, but the capital is flowing, institutions are paying attention. Ethereum's congestion is creating a big demand for solution, and this is it. Modular layer 2s are S tier. They're not the sexiest, but they're absolutely critical. Without them, you can't have DeFi, RWAs, or everything else scale. That makes them more than a trend. They're the foundation of the next wave. If you're finding this information insightful and want to level yourself up with even more alpha, then definitely come join me in the FireHustle VIP Discord. My team and I work around the clock to deliver the best value. Just look at what we've been cooking up here. Everyone's super happy with what we've put together. The feedback has been great and we've been improving. The link is down below. Come and give it a try. The next narrative is one that we've been discussing in depth in the Discord. It's AI. This is where blockchain is supercharging an industry that's already on top of the world. Bittensor, Near, Render, and Fetch AI are just a few of the big billion-dollar cap projects leading this wave. They're building GPU networks for training and running AI models. They also enable AI agents to do everything on chain, creating decentralized infrastructure for models, bots, and automation. This is another one that reminds me of 2020 when real utility projects started gaining traction. I don't need to convince you that AI is going to be a leading narrative. Bill Gates is saying that AI is moving at a speed that even surprises him. He's saying the experts can't tell if it'll replace humans in 1 year or 10. This is a $1 trillion market in the making. It's A tier. Not because it lacks strength, but because it's still early. Institutional money hasn't fully committed yet. But when it does, this narrative could push towards S tier status. But let me take you deeper down the rabbit hole. Within AI agents are one of the hottest emerging trends. These bots can execute trades, manage wallets, and interact with the dApps autonomously. On Solana, Griffin reached a $600 million market cap early in 2025. This was one of our favorites in the FireHustle VIP Discord. It earned direct praise from the founder of Solana, Anatoly, for simplifying user actions into plain language prompts. That's real usability. Akasha, part of the Bloom protocol, has also really grabbed my attention. There's speculation around a Bybit partnership and some other massive updates. Then there is Agent Hustle, which pulled off a clean token migration and saw volume spike big time in July. These aren't just ideas, they're actual working products. We already saw how red hot this sub-narrative was in November and December. It's getting serious traction, but adoption is still mostly developer driven. We've only seen it pop when there's big updates announced. That's why I'm putting it in my A tier. Massive potential, strong ecosystem alignment, but retail and institutions haven't really pushed heavily into this one yet. But this is one that I'm heavily focused on and see pushing into S tier as the cycle continues. There's a lot more on this in the FireHustle Discord, so come check us out for more alpha. Another one in the A tier group is the Solana ecosystem and Deepin. Solana processes millions of transactions every day. Its low fees and fast speeds help make it one of the main choices for everything from meme coins to GPU leasing. Networks like Helium and Render are building on Solana to power their Deepin infrastructure. We can't forget that Solana is in the top 4 when it comes to RWAs and is the second biggest chain when it comes to DeFi. Solana-based ETFs are also gaining traction. The tech is fast, the dev activity is solid, and the ecosystem is showing real-world utility. It doesn't have the institutional scale of Ethereum, but it's strong. It holds A tier status for its momentum and applications. Now, there's a few other A tier narratives I want to touch on before we move on. Privacy and ZK infrastructure is finally scaling. ZK stands for Zero Knowledge Proofs, which is a tech that lets transactions be verified without revealing details. It's all about privacy while still having all the benefits of blockchain. The SEC's July innovation exempts open doors for private DeFi and tokenized asset transfers. But the adoption still needs to grow. But there's already some real traction. Altcoin ETFs and crypto treasuries are another big one. Trump Media filed a multi-asset ETF, and the SEC is approving altcoin products faster than ever, giving traditional finance exposure to alts. Both of these narratives are strong A-tier contenders. Now, before we wrap, I want to quickly show some love to a few of the narratives sitting in B through D tiers. These are niches like GameFi infrastructure, decentralized social platforms, Bitcoin L2s, and legacy L1 chains that haven't evolved. Some like cross-chain bridges or dynamic NFTs still have teams building and show signs of life. I personally actually hold positions in all of these, not because I expect them to lead the cycle, but because in crypto, things can flip very fast. One major catalyst, partnership, or product launch could easily shift a narrative's tier. So while they're not core to my current strategy, they will likely have their moment. This list reflects where we are right now, but it's always evolving. Here's a reminder to subscribe to the channel and turn on post notifications so you don't miss my next narrative tier list update. Now let's bring it all together. What does this tier list actually mean for my portfolio? S tier narratives like RWAs, Ethereum, and modular L2s aren't just hot topics. They're backed by regulation, institutional adoption, and real-world use. These are my current foundation. They give me stability in a market that's anything but stable. When M2 dips or the Fed shifts its tone, these narratives still stand. They're not hype, their infrastructure. A-tier narratives like AI agents, and privacy tools are my high-risk, high-reward plays. They have explosive upside, but they also have more moving parts and a higher chance of delays or reversals. These are my bets. The ones that can give me beautiful multiples because I'm early and positioned well. My strategy is to blend both. I anchor my portfolio with S-tier narratives and rotate into A-tier narratives and others when the setups are strong. For example, GameFi is one that's really popped off in the past, and there's a lot of building happening there. But you also need to be strict with your decisions. If a narrative can't show real traction or capital inflow, then don't spend your time there. So ask yourself, are you riding the wave of scalable narratives like modular L2s and Ethereum ETFs? Or are you still holding relics like Metaverse Land, hoping it'll magically come back? The positioning you choose now could make all the difference in this cycle. Momentum is building fast, and some of these narratives are already leading the way. I'd love to hear what you guys think. Drop your thoughts in the comments below. I read every single one. As always, this video is for educational purposes only. I'm not a financial advisor. Crypto is high risk. Always do your own research, understand the volatility, and never invest more than you can afford to lose. If this video brought you value, then hit that like button, subscribe for more deep dives, and turn on notifications so that you never miss an update. Thanks for watching. Stay smart, stay hustling, and I'll see you in the next one.